Hi, this is Kevin, and posted this YouTube video. We're going to try this to see if I can explain this in a way that maybe would help some of you. I've had some questions about the accounting equation, assets equals liabilities plus owner's equity. How do we understand that? First of all, this will always be true as long as numbers are calculated correctly and the entries are made correctly. Assets will always equal the combination of liabilities plus owner's equity. Now that may seem kind of abstract and it may not really strike home with you, but we're going to look at it in a different way, because there's another way to look at this equation. If you're a math student, we've just flip-flopped this liabilities to show that assets minus liabilities always equals owner's equity. So that's just a second way to look at this equation. It's always listed on the balance sheet in the first manner, but the second manner is also true, and I think it may help if we try to explain it in light of the second equation. So let's use a personal example and see if we can put some numbers to this and make some sense out of it. We're going to look at an example here of someone who has three assets. They have a home that they bought for $80,000. They have a car that's listed at $10,000, and they have cash in the bank of $10,000. So they have a total of $100,000 in assets. If we go down to liabilities, they still owe $60,000 on their home. So they have a liability on their home of $60,000. They have on their car they owe $5,000 still, and on this they have a student loan where they owe $7,000. So they have a total liabilities of $72,000. So if we go back up to number 2, our equation up here, assets of $100,000 minus liabilities of $72,000 equals our owner's equity, or in a personal case it would be, sometimes it's called net worth. This is basically what the person is worth if they sell all their assets and pay off all their liabilities. In this case, we have an owner's equity or a net worth of $28,000. And that's simply assets minus liabilities equals owner's equity. And if you think about it, it makes sense. If they sell their home for $80,000 and they owe $60,000 on it, they've got $20,000 left over in equity. If they sell their car for $10,000 and they have $5,000 that they owe on it, they're going to have $5,000 in equity. And they've got $10,000 in cash. If they pay off their student loan, they're going to have $3,000 in equity. So if you add those three together, you get $28,000. So that's how we get owner's equity. Now, this also works if you go up to our accounting equation. Same numbers, assets of $100,000. This is why it's always going to equal liabilities plus owner's equity, because the assets of $100,000 are going to equal liabilities plus owner's equity. $72,000 plus $28,000 is going to equal the $100,000. So that's why this equation is always true. And some of the problems in the book, then, they give you two of the three. For instance, they could have left off liabilities in this case, let's say. And so they give you assets of $100,000 and owner's equity of $28,000. So you just do the math and figure that you need to have them both equal $100,000. And so you've already got $28,000 in owner's equity. So we can figure out that liabilities is going to be $72,000. So you can solve, as long as you have two of the three, you can always solve for the third. So let me know if this is helpful and if you have any questions on it. Thanks.